just for you. So come along and take my hand.
What's good, guys? So, tried this a couple times, but didn't like the way it came out, so I'll try to be brief. Look, I'm here to address my old college roommate, and turns out he's a trader of equities, which is cool. I'm happy for you, dude. I'm glad you've done well. And, well, my trip into equities began in 1995 as a senior in high school. A year late, but whatever. And ask yourself this. You know, well, really, well, it's obvious that Mark and I must have rubbed off on you back between 97 and Y2K a bit. So I guess you saw what we did, you know. Everything from scalp trading to dollar cost averaging to, you know, I helped Mark and a few others, my father and whatnot, helped them do very well, but it was never my money, dude. You know that. I mean, you saw me. I was at rock bottom. You know, no one gave me anything. You know, I did it in exchange for rent. You know, but so what? I didn't care. I had no idea I was being prepared for any of this, but whatever. But no, I was hit with a line of crypto is too volatile. Right. Did you know that these same talking heads that you've been programmed by, if you did the opposite of what they said, that you would be correct more than 95% of the time? Just saying. I mean, now, here again though, if you're meaning too volatile, meaning too risky, okay, those are two completely different aspects. Two completely different meanings. And really, it's neither. To me, it's not that volatile in the long term. I mean, if you're trying to live off of scalp trades, maybe, yeah. I get that. You know, and if you're using leverage, I pray that you're not. You know, margin calls aren't fun. Wipe you out, your credit, everything. You know, everything. So, little experience in that. And as far as the too risky bit, look, I feel it's too risky not to be in it. But, you know, I'm not here to persuade you either way. I'm just asking you to analyze what you said just a little bit more, and then look at what you're saying. Analyze what you're saying as far as too risky. That's, you've been programmed. So, and, well, okay, let's go back to Commodore 64. Okay, in programming, we would have lines of code, say like line 10, 20, 30, 40, 50, 60, that sort of stuff. And in the code, when it didn't work out, the way it was supposed to, we were able to go back into the lines of code and then make amendments and adjustments going forward. So then we could go in and reprogram to, line 15, 25, 35, and then, whether it's line 14 or 13 and 14, and then lines 22 and 23, we could go in and make adjustments. So it's just not computing. It's just not, okay? Let me try to explain a little better than the previous failed attempts here recently. So, okay, if you were to analyze what these people are programming you with FUD, fear, it's too volatile, it's rat poison squared. Riddle me this, Batman. Why is Berkshire signed off on all of this? Who owns New York Stock Exchange? It's the Intercontinental Exchange. What are they doing? Oh yeah, crypto. Who's NASDAQ partnered with? Oh yeah, crypto. Yeah, it's risky, dude. We don't want you in this. This is not good. This is for your protection. For your protection. Right. You're not accredited. Right. Actually, I don't know if you are yet or not, but, anyway. This is only for seasoned investors. And here again, let's analyze this, okay? What you said, it's too volatile. Okay, well, if you're a trader, don't you thrive on the volatility? I mean, if you're a trader, how do you earn yield in a flaccid market? Trading CDs? Certificates of depression? That's like, they laughed at us back in 1997. I remember different IPOs came out. I made a killing in IPOs back then. I made a killing on scalp trades too, because there were good, great companies that are still around today. And, say they went down a bit. The market would crash. And back then it was easy for me. It was no big secret back then. You bought on a Friday. Okay, use the Wayback Machine and verify precisely what I'm about to share with you, because I can still see it. So, on the Wayback Machine, okay, they laughed at us. Then they're laughing at us now. Suddenly now, the talking heads are picking up on a little bit of it, but they're still clueless. And where do these so-called experts come from? Okay, I've been in this space since 2014. No one I know has ever heard of these jackasses. They're all full of shit. They just pick up a little bit and run with it. So they, this certified professional, right. Management fee, this fee, that fee, whatever. Custodian, right. We need, you're not, it's too dangerous for you. It's too volatile. We don't want you in that. We earn a better percentage on this as far as our commission. That's cui bono, Latin for who benefits, right? So look at it that way. So I mean, SYS 2309. So go in through the back door. Look at what they're doing. They're spreading FUD. They're playing catch up, dude. I'm not saying 100% of anything, I'm just saying I think it would be a disservice not to have a position of a portfolio in crypto. That's it. I'm not saying everything, and I'm not trying to push you in any way, shape, or form. It's just letting you know when you're ready, dude. I'm here for you, you know? So, it's, I don't know, dude. The writing's on the wall. I mean, look, what I see, okay. MSFT, AOL, UBID, AMZN, YHO, INTL, KO. Anyway, AAPL, okay? I remember AAPL, I see it between $7 and $11. They laughed at us, dude. You were stupid. You were stupid. You don't know what you're doing. Right. Where's that at now? How's that working out for you? Made a killing, dude. Made a killing. Right? So, too volatile, too risky. That's just mainstream gobbledygook word salad horse pucky. That's all that is. That's the psychology that they're playing with on you and others as well. So, because they know better, right? You know, PE ratios, price divided by earnings, that doesn't matter anymore. You know, just like, 2001, 2008, but whatever. That's when I leave. When PE ratios don't matter, no, incorrect. Trust math. Okay? And that's what this is. It's a protocol. So where we had lines of code, we could go in and make different adjustments. Well, I see that you've been programmed. And whenever you're ready for an adjustment, an upgrade, let me know. I'm here for you, bro. So, my old college roommate. Love you, man. But I don't want you to miss out on this, you know? It's been fun so far. It's been a hell of a ride. Many ups, a few downs, but you gotta separate emotion, dude. Don't look at this every tick, and I think that's where you're at. You're looking at the tickers. No, I'm sorry, not the tickers, the candles. And you see a candle here and a candle there, but you need to follow it longer than a week. You need to follow it longer than a month. So go back and look what these people were saying in 1997 to Y2K. Exact same thing they're saying now. The exact same thing. Because they don't want you in. That's why. And when it comes time, when the mad dash to the exit doors happens yet again, because I have witnessed it twice already. Y2K, or 2001 rather, and 2008. So whenever these things start going off, that's when I get concerned and move into other assets. And that's the big issue I take in with metals, with these people in metals. Now I own metals. That's a part of a portfolio. Okay, the issue I take with people in metals, one of the issues, is that they preach to all of these other institutions, custodians, that if their clients were to hold a higher position, of insurance, basically, or a hedge, that the price would go exponential, right? But yet, they're saying that crypto, No one should own crypto from the metals community. That was just nuts, dude, for years. Actually, that's what made me get into crypto in 2014. Because everyone in the metals was, oh no, and nothing in crypto and whatnot. Look, I'm more afraid of equities and bonds at this point than anything. I mean, what I was saying to you was not that you should get into crypto. I'm saying that crypto is actually a solution to the financial mess that we are in. We can do different things in the code, in the programming of different things. You can fork a project even and take what they have built. And, but it's more you have to have other things in order for it to work. You can't just fork this and make it happen. It must work. It must be a proven model. So that is what I was saying. I was not saying to, sell it all and run for the hills and only buy crypto and nothing else. It's like buying diamonds now, dude. Really? I mean, you remember Mark and I talking about we were gonna fly to some. I think it was like we were gonna fly to South Africa or something like this and go in search of diamonds, and we were gonna just swallow them and come back across the border with like $250,000 a piece of diamonds. I know you remember that kind of stuff that we were talking about doing. Shit, we were in college. We didn't care. We didn't, But no, I want you to reflect back on Mark and I want you to think of the psychology of a market. Why am I in crypto? Why are these major institutions in crypto? Why are they telling you one thing and doing another? Watch what they do, not what they say. Who's involved? You think they're dropping hundreds of millions of dollars on it's too volatile? No. It's too risky. No, it's not. Not in the long term. Like I said, if you're trying to pay the rent with it, no. This isn't intended to do that. All I'm saying, I hope you see me more as a voice of reason in that a diversified portfolio in a crypto would behoove you. Anyway, just a portion. That's it. So, but here again, I'm not here to push you in any way. So I'm just saying that is fake, phony, and false, what they're telling you. Do a little recon on your own. Spend 30 minutes a day. Just take a look. Take a look-see. Research it. Call me. I'll rock with you. Love you, bro. Take care. Y'all be cool. Later.
Every sunrise is just for you. So come along and take my hand.